Good morning. Great morning, everyone. CTM, what's going on, everybody? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. So excited for this session. It's going to be an important session because it's going to be a work session. It's going to be one of those sessions where you have to put in the time, and it's like a workout. You know, sometimes you don't really maybe even want to be there. And when you show up and you put in the time, that's when you're getting the most money, the most out of it, right? That's this session right here. Don't worry, right after it, we get to have a CTM training session where we get to have that creative process going on. Brandon's going to be breaking down Bitcoin momentum and allocating capital into alts. It's going to be a good day. I'm really excited for it. Bitcoin right now trading at $37,175. Everyone watching the symmetrical triangle it's trading within. If you drop down to a low time frame, you could see it, right? Drew it in last night on the Twitter. Someone mentioned that Alan A. This is so funny. Alan AU, and Giles, I love them both. They're bringing the fire on Twitter this morning. I haven't had the opportunity yet to check in with Alan's tweet. Looking forward to doing that. Always good stuff. I saw Will also bringing the fire out on the Discord, and a bunch of you. It's a great moment to be alive and to share this precious gift of life with all of you. Really. So what are we looking at today? We're going to be taking a look across the markets. Bitcoin over here in this triangle over here. You can see it. It hasn't broken out yet to the upside. Hasn't broken down yet to the downside. But we have our goalposts. And we wait. We don't want to. I'm down here in the 2 hour just to show you the precision over here. You don't want to be hanging out in the 2 hour right now, right? First of all, price is consolidating, getting ready to break out. Nevertheless, you want to fix yourself. Lower that time preference. Go to a higher time frame. All right, let's check out what's going on over here. I'm gonna get off the log chart for a second. You can see by the way, Ethereum this morning is doing what it's done so far this entire bull market phase. It continues to track Bitcoin and continues to outperform. Could you go ahead and smash the like button if you were one of the people here who heard several months ago here and heard it here first, that Ethereum outperforms Bitcoin in the bull market phase? Go ahead and smash that like button, so support. If you're watching this on the replay, so happy you're here today as we get going. Kenny, is it a big? Lots of love, my brother. Lots of love. This is a bit concerning because up until now, we don't see any V-shaped recovery. Should I sell or hold my spot position? This might even be the question of the day. We're going to break it down for you, Kenny. I hope by now you already understand and know this. You should have a really good idea to the answer of this question ever since we dumped down on May the 19th. We dumped down May 19th. That was a day of compassion. We call that the day of the compassion. That's what we should call that, as we got online over here on the live stream over here. But the next morning, right, what do? We laid out what option A is, right? An option A is that we continue following and the model plays out. We'll get into that in the session in a little bit. Option B would be that we go into a longer term, right, Wyckoff accumulation phase. Both of them, by the way, would end up, resuming out of whatever correction we're in now on the break of this outer trend line over here. Even if we went into a 2 or 3 month consolidation, once it finally breaks out of this trend line over here, the most important trend line in all of Bitcoin right now is this trend line right here. And then we'll be looking at them peaking, I believe, still within the model of the 4-year cycle. We'll work it all out together. We'll make sure we bring that clarity, right? Ethereum continues to do what it's been doing this whole cycle. And Ian does such a great job illustrating. You have Ethereum in red over here, and then you have Bitcoin in blue. That's this current bull market phase here in 2021, the 2020 4-year cycle. And you could see that Ethereum tracks Bitcoin instead of the previous 4-year cycle where you saw them different, nuanced. Their timing was more off. Almost their timing is absolutely in step and perfect up until today. But Ethereum continues to outperform, and you're seeing that even again today. right? So you're seeing the market playing out today perfectly on time. If you look at the dollar slightly bid today, we have Will zooming in and showing the channel. I got this rough sketch over here, this trend line over here that we've been following, just showing you as long as we stay below it, we have that momentum here to the downside as we test this important support over here, seeing if we make a new yearly low or not. And then Will brings it into a little, not a little bit, Will gets precise with it, right? And he's showing us what's happening over here as right now, so far intraday, we're trying to break out of here to the upside, which would bring in a retest of this spike up here into the resistance at 90.43. Interesting that why the dollar is slightly bid today. So it's unchanged, right? But when the dollar finally even goes a little bit green, you're gonna be like, wow, right? By the way, 10 years are off, but what the 10 year is doing is it continues forming this bull flag right now, right? Very, very bullish so far until it breaks down. And right now you have to watch out for the bottom support of that bull flag. Dollar over here is slightly green, right? And then you see gold and silver also green on the same day, right? Just observations. Nothing in play today. Everything kind of slow and methodical today. So right now, so far, that could change. That could change even in cryptocurrency, right? You see alts on the move. You could see Bitcoin by the end of the day be rejected by the current resistance that it's in of the symmetrical triangle and be either testing the support of that triangle or breaking down, or it could break out to the upside. But there's no reason to be preemptive in as far as taking a trade before you have any type of signal. And not to mention, I don't think anyone at this point should be, I was very clear about this yesterday. There's no reason to be trading Bitcoin right now. You trade Bitcoin when the momentum is in your favor. Right now, technically, we've had a lot of breakdowns. It's this line over here, the most important line that has you back towards momentum. Now, if you're accumulating Bitcoin with that longer term time preference, right? I did myself. I bought last week at 39,000. Happy to do it. I think it's a great entry. I didn't plan on doing it. I was fully positioned coming into the halving. But this 53% drawdown mid-cycle, well, that's an opportunity that I was there to take advantage of, and I like it. If you look at the equity markets this morning, right? A lot of people now all of a sudden, you see that all of the internet, the World Wide Web, they all became Wyckoff experts, and now they see Wyckoff distribution patterns everywhere. Everywhere. They're calling it out right now on the S&P, calling it out on the Nasdaq, right? Where else? I don't know. I don't really care. I'm going to follow my TA over here right now, right? This is the line over here that maintains as long as we're above this very bullish structure in place. We're like 0.5% or 1% off the all-time high here on the S&P 500. The markets are not crashing. Everyone continues to look for that crash. Everyone. The markets, by the way, that if all of a sudden in a couple of weeks at the Federal Reserve, press conference or in the meeting minutes, Jerome comes out and he says, listen, we have no choice, but we got to start pulling back QE. We got to start tapering. The markets might react to that. The markets might react, and we don't know how the markets will react. Markets might be like, oh, you know what? Everything's looking good here. We're running hot. The Fed feels that they could pull back, or it might have an adverse reaction. We don't know. But don't think until the Fed signals what's going on that you're going to see any type of adverse reaction, or unless something breaks. But we're not seeing any type of that breakdown whatsoever. Don't forget, when things broke down in February into March, if you want to see something special, go back into the end of January, all through February and all through March, and watch the work that we did here. There's only one other place on the whole internet, and it's Macro Voices, who was even aware of what was going on worldwide and how it was going to affect the markets. Everybody else was behind. It was the same way on the way up. It was the same way up. I did watch a video the other day about one of those macro guys that I love so much, and they're talking about how well they called it up to this point. They were calling for us to come back down and test the lows, and they were calling for an insolvency event almost until the summer of 2020, right? And then all of a sudden, anyway, it's all fun and games. You have to pay attention to what's going on. You have to do it all the time. Speaking of which, what else is going on over here? I want to talk about this trade over here. This was shared in the Forex discussion channel on Discord, talking about, sideways markets. You know, do you enter when you enter a trade, right? When we talk about the CTM strategy and principles, we give a very methodical strategy to trade the markets, as black and white, as close to black and white as you can get, right? In order to help people have a solid foundation to build off of. One of the things that one of the most important things is pushing your trades, right? A lot of traders are in the habits of cutting their losers short. Cutting their winners short. What does that mean that you cut your winners short? You get a trade that's slightly into profit and you take the profit. You're very good at protecting your winners from turning into big gains. You're cutting your winners short. Now, if you reverse that, and that requires sitting down and understanding and rewiring your brain and having a conversation with yourself. The easiest way to do that is if you ever had one trade that you held on to. If you ever had a losing trade that you held on to and or added to as it was a loser, and it wound up just becoming an enormous loss. You know what it means to let a loser run, right? You know how you could take many small profits, many small profits for a long period of time, and then come across one trade that you let the loser run, and it wipes out all of those profits plus a lot more. That's letting your losers run. You need to let your winners run. You can't do that if you're in the habit of cutting them short, right? So that's probably one of the most fundamental things for setting yourself up for success in the markets. That's why there's a hard and fast rule about not cutting those profits short. Now, this wound up being a beautiful trade. The question is, and this is not appropriate for this, is, what do you do when you're in a trade that's going nowhere, right? So, I mean, you all have heard me mention over and over again, whenever we're talking about, especially FX, I avoid sideways markets, and I avoid them like the plague. I'm looking for trending markets that I could get myself involved in a swing trade that has the possibility, the opportunity to break multiple support levels when selling or multiple resistance levels when buying. In a sideways market, and you could trade them, by the way, if you're able to understand that a market is consolidating sideways, yes, you could actually have a very profitable strategy selling resistance and buying support and playing within that range. That's probably, it could be done easily, right? It's not my style. I avoid sideways markets. The entry over here was beautiful, right? The entry came up over here all the way in January of 2021 on the Euro British Pound. And we were looking at the British Pound, by the way. One of the first things we did the first week, 2 and 3 of January, was talk about, now that we've had that type of resolution in the markets, with the Brexit coming out to some type of deal and arrangement, that we will be looking for appreciation in the pound. You saw, by the way, on the if you go back and watch those videos, or if you were there, a lot of you were there. We talked about, and I talked about, this being my target on the pound Japanese yen. Look at this. We finally came into it and touched it and kissed it perfectly. If you go back into the first week of January, this is on here, or the second week of January, this trend line's over here, price is over here, and I'm targeting that trend line right there. Boom. And that's full profit, take it if you're in it. I'm not in it. If you take it, it's full profit, take it. If you get the breakout of this trend line, you have an opportunity to re-enter that trade. Just interesting. But we were talking about the possible appreciation, or how that looked to be something to really focus in on, right? And look at this beautiful entry taken on the Euro British Pound. Now, the question is how to manage it at this point. So we're going to talk about that really quick. I don't know exactly where the entry was, by the way, right? Even if it was, it can't be down here because that's not a CTM entry all the way. Wherever it was, as you come into that first area of support, obviously the stop loss has moved to break even. So as we get down to this level over here, we're just assuming the stop loss is at break even. That's just 101. That's fundamental. That's beginner, right? By the way, if you're watching this on the replay, you don't even know. The bond is strong. All right, but please do go ahead and smash that like button and make sure other people are able to see what we got going on over here, because it's extraordinarily special. It's extraordinarily special, and I'm glad to share it with all of you. All right, here we go. So what happens next? Finally, you break down over here. Stop loss is at break even. You break down over here. You break down, and then what happens, right? Well, once you broke down over here, right, you keep your stop loss at break even. When are you moving your stop loss and leveling it down next, right? That's the question you need to ask. Now, I don't know. I'm just going off of this chart, right? I don't know when these support and resistance levels were moved and moved over. I could see over here. I'm curious if I move back to the left, if this is a support level. It looks like it's a support level, right? And you can see once you broke down from that support level, it was retested and now it held as resistance, right? Right? That would be a sign or an opportunity to go ahead and further lock in profit. Now moving your stop from break even and moving it down perhaps above here, above this high over here, this area that if you know if price broke on the upside, all of a sudden something has changed and you're wrong. Okay. Wow, I asked everyone to smash the like button. All of a sudden the thumbs downs fly. A lot of tainted people out there. That's beautiful though. God loves you. I love you. It means nothing to me. But it does mean something to me when you go ahead and show support, when you smash that like button. If you learn something new or you're just appreciative to be here, go ahead and smash that like button. Help support what's going on over here, everyone. Fire it up. All right, so what happens? So listen, this trade wound up unfolding pretty quickly over the next couple of months. It was a pretty strong downtrend, right? Pretty strong downtrend. You have to look how to manage this trade, right? Look at this beautiful trend line that we have drawn in over here. Look at this beautiful trend line you have over here. The person is still holding this trade, by the way. They're still pushing this trade, and I love it. Well, I love the fact that they're really trying to actually work on pushing their winners. They're really, really working on one of the most important aspects of trading. Absolutely beautiful, and I respect that. However, at the same time, after affirming that, let's dig in a little closer and see what's going on and where the best possible exit could have been. Now, in hindsight, it's always easier. So, in hindsight, but you have to take a look, and that's how you rewire your brain, you reprogram yourself so that when it's happening going forward in the next opportunity, in the next instance, you're there and you know how to act and when. Right? This trend line, by the way, is very clear, very easy to draw in over here. And then you could see in this area over here, when it held, that at that point is an important signal, a very important signal. By the way, at this point in time, when the market right now is paying attention to that resistance, and this resistance over here at 0.87 is drawn in perfectly, I gather and I imagine that it was up here at the time until the market started showing this. Because this would have been correct. This touch of support, the broken support held as resistance, and then another touch at that very resistance. So let's just imagine at this particular time back in March, this resistance is up here now, is right above there at the top of this peak, at the top of this peak, and the top of that touch, right? After resuming off there, your stop loss would have moved down from break even, down to locking in a little profit, and now locking in over here for sure. Because if price comes back up after resuming off there and takes that out, it's just time to exit the trade. Now, that never happened, though. You would still be in this trade. Price comes down and is still under this trend line. Again, another possible break. It's like what's happening on the DXY right now. But you could see this is the 8 hour. It's got to close above the trend line on a daily to be a break anyway. This held on the 8 hour, no problem. Over here, you break out from the trend line over here. Right? So over here, two things. You break out from the trend line here. Is this your exit? Right? Is that the best exit? Is this the exit going forward you should be looking for? Right? I think so. But also, there's other opportunities. What about this peak over here? This would now become support, right? Where you put that line in over here, that's subjective. I don't know. I don't know if you wait for price to take out that high right there, or if you had it above this area of resistance right there. Either one of those two places is also a very good exit. If you wanted to give the trade a little bit more room to roam, it's still a very good exit over there. And it's a massive trade, by the way. A massive trade, right? If you're in the trade now still, you see clearly that the market's paying attention to this area, right? Yeah, you have it with precision. You could be a little bit loose, a little bit above, and knowing if price takes out that resistance at this point, you're exiting the trade. But that's just looking how to manage the trade, using hindsight as an opportunity to learn from. The best exit is on the break of this trend line. You show how you're locking in those profits on the way up. This is still a great exit. If you didn't exit here, by the way, and you're exiting whatever it is, 50 pips higher, you got to be comfortable with that. It's a great exit. So that's fun. Thanks for the opportunity to do that. By the way, this is just like a news flash. Sometimes you don't have to always read the articles. Sometimes you can read the headlines. And this is an important one as the EU is getting ready to now launch their digital wallet, right? I'm not up to date what the EU is doing as far as what's going on with their, let's call them vaccine passports, but right now they are introducing digital wallets, right? The latest step towards this is signal right here, a cashless society, and further control by the central banksters, right? Further engineering of the overall economy and our society. Paying attention always to what's going on. This was really interesting. This was put out by Giles, right, this morning, sharing with me that on the Investors Podcast, Preston Fish, Adam Back, right? Adam, by the way, right? How many people were quoted in the Satoshi white paper? How many? There were 7 sources or 9 sources quoted. One of them, Adam Back's work, absolutely phenomenal. By the way, Adam liking Giles' tweet this morning, absolutely amazing, absolutely amazing. Adam Back's. So I'm looking forward to watching this. By the way. This is Adam and Plan B talking about that. There was a little bit, I'm going to call it FUD, thrown at Plan B yesterday, brought to my attention by CTM. Thank you for letting me know about it. I like to know everything that's going on around me. Very nice. Yeah, pause. I'm going to come back to that in 1 second. Let's talk about this over here in the DXY. Are we looking at a double bot? Just heads up, I don't consult, personally, the monthly charts ever. It's just too high of a time frame for me, right? Is that a double bottom over here back in November and now over here, right? Is that what we're looking at? Is that the question? It's pretty strong support in that area, right? Really, that's why if we lose this support at 88.40 over here, it's going to be a waterfall down towards 83.40. This is the first area we could hold. It's a very important level we're putting out. By the way, second born, sincerely, and you will really appreciate this and you will love it. You see these channels that are drawn in over here? If you go back and you watch, I don't know if it's January 4th, 5th, or 6th, but it's easy to find because DXY is in the title. You really want to watch that video. It's really beautiful stuff over there. And we talk about what's taking place over here on that larger time frame as we begin the year. We talk about a price at that point was trading down over here. It was somewhere around, it was somewhere, there it is. Where's January 1st, right? It was exactly right here. And I was talking about, we could go a little bit lower and test that 88.40, but probably after breaking that trend line, we come up and retest it. And then we see what happens. And that was tough. This whole area, we broke above the other end over here, right? This was very, very tough, right? But this looks like what we're seeing, in my opinion, in my mind, is a bit of a fake out. A break above that back into that channel. It ultimately hold. And now we're looking to resume down. Now this is the larger picture, the bigger picture. We haven't yet resumed down. We break that support, we resume down, and then we have that last line of hope. That last line of hope, right? If we break down from there, the dollar could really sell off. There's a lot of reasons why. Fundamentally, that could come into play. No question about it. Everyone's aware of that. But what we do is we come back now to the 8-hour, right? And we're watching. And as Will showed us this morning with that precision, we're trying to break above this trend line again. Now, if we don't break above this trend line, what we do next is we go ahead and we clone this line over here. This is rough sketch, by the way. And then we're going to be looking like that, right? Off of these 2 touches. And then we're going to have that outer line because at that point it's on the 1 touch. And because I wasn't really focused in on it, I didn't go ahead. We only use 1 touch for trend lines. Have you ever heard a lot of people will tell you need 3 touches for it to be a trend? No, CTM, we use 1 touch and it's super effective, which is why we do it. But here you have 2 touches. You have to start paying attention if this were to happen. So we'll see what happens, whether or not we're rejected or this holds today. All right. But what I'm getting at is don't look for the double bottom at this point. What we're looking at this point, if we break outside of this trend line over here, the selling pressure has alleviated for the short time. That either means that we bounce here, and that means we could bounce again up into this trend line, or that we go sideways for a while, right? But the selling pressure will have alleviated, and we'll track it and we'll watch it, right? So that's that. Good stuff. I wanted to build off of that comment, right? Good stuff. So back to the Preston's podcast over here. I am looking forward to watching this one. Good stuff over there. In Adam Back's, right, explanation as why today trading Bitcoin is a bad idea. It's absolute fire. He basically says many of the things you've been telling us since the start. It's a great summary and reminder that could bring more clarity to some of our members. Well, that's what I'm interested in. I'm interested in bringing as much clarity to myself and to all of you all the time. I'm looking forward to this one, right? So look at this is really important. I read this. People have a fear of being out of the market. This is what we were talking about yesterday. We're talking about the fear of being out of the market. Fear on the upside, fear on the downside. And I'm telling you right now, things are uncertain. I explained when things got uncertain and why. You know? And then I'm saying, well, it's going to be a while before this repair takes place. You don't need to be in the market. You don't need to be in a rush to call any type of Wyckoff accumulation phase because that's not what the market's showing us yet. And we have our past model to show why that's probably not going to happen and why option A is we continue playing out from the mid-cycle dip. And if it doesn't, and if we take out this low, and then all of a sudden we are seeing what is the beginning forming of a Wyckoff accumulation phase, we will be on top of it. And we're from the day one, this is the dumb, from right over here, we planned out what option B is. We have the help of a lot of the community putting out, planning out, putting in. At the end of the day, right? I don't want to get the names wrong because it's from, I think, Stewart, right? Is showing that if we do enter some type of accumulation phase, that the breakout from it, because the whole point of the distribution is to set up an accumulation phase to position in for when it goes back up. It's the same thing as we look at, just simplified. We make things a lot simpler, right? When it breaks out of the accumulation phase, it's still the break of that trend line. Right now, you want to be on the side or just accumulating Bitcoin, right? Taking the opportunity like I did on that dip. Look, he goes on to say, people feel that like they need to be in the market. They have that FOMO of missing out, that fear of missing out. Going back a few years, I had the realization around 2014 that it wasn't a good idea to day trade this thing, to try to think, oh, I'll sell some now and buy back later, because you're looking at some highly volatile, more so at the time, of an exponential S curve. An otherwise random variable. So if you sell and buy back, the odds are stacked against you. Now, listen, I just want to differentiate over here when I talk about the 4-year cycle and breaking that 4-year cycle into different phases and looking if we see the 4-year cycle playing out, meaning look, if we see a blow off top coming at, tracked to the day. Now, when I say day, I mean like in the average of the days of the past cycle. I'm selling because I'm looking to accumulate more Bitcoin. What we're talking about over here, and I talked about on 3 ways to trade the Bitcoin bull market, those that try to trade it are not going to do as well in most cases as those who held on for the duration of the bull market. That's what people trying to trade in and out. That's much different than trading out over, 12-month or longer time frames. Just want to differentiate over there. Listen, another statistic that illustrates this. Listen to this one. If you eliminate many of you have heard it before, or the top 10 days, but listen to this. If you eliminate the 12 single day largest gains in a year, Bitcoin loses money every year. People trying to time the market by selling in a bull market understand that if you eliminate the 12 largest days, if you're out of the market for this type of candle over here on the upside, and you eliminate the 12 of them, the 12 largest, you're losing money every year on Bitcoin, right? So now people are confused because, this in traditional markets, the standard definition is, right? And I saw Heath talking about it, and I see Benjamin talking about it, 20% drawdown, and that's a bear market. in other markets, right? But wait, strategy number two, we're looking to lean in the bull market phase. 20%, we'll start scaling in. It's a different mentality. It's just a different, it's Bitcoin. It's its own unique asset. No question about that. All right. What else? That looks like a good one over there. There it is over here. They talk about in this episode, by the way, the volatility potential impact on the broader global economy, on-chain analytics, the China mining update. This is Dr. Adam back, by the way. Bitcoin derivatives, how they impacted the sell-off. We talked about that here. We talked about Elon's tweet in conjunction with whatever and there was manipulation taking place. When you saw record inflows onto Binance, 24 hours later, record outflows onto Binance. That's the whales trade on leverage. Why? Yeah, it's exactly what they do. It's exactly and they were triggering those massive liquidations. It went into a loop and we saw a 53% drawdown unfolded quickly. And it was a massive reset in the market. Healthy thing, by the way. Proof of work, proof of stake. I'm interested in all that. Thank you, Giles, for letting me know about that. Here's the tweet over here, and you could see that over here. You could see that Adam over here liking it. Beautiful stuff over there. All right, what else? This is a good one also. This is the legend Stanley Druckenmiller. You guys are all familiar with him, that's for sure. He's talking about what helped him make the bullish case for Bitcoin. We're talking about people selling in a bull market phase, right? Why that's dangerous. The reason that Stanley, or one of the main reasons that Stanley got invested into Bitcoin, right, is because Paul Tudor Jones, these are, by the way, and have always been my two greatest heroes in the markets, is Paul Tudor Jones, right, and Stanley Druckenmiller. And I've learned the most from them. Absolute legends. He calls him up. Amazing. Calls him up. And he's like, do you know that when Bitcoin went from 17,000 to 3,000, 86% of the people that owned it never sold it? What? And Stanley says when he thought about that you're dealing with something with a finite supply, and 86% of the owners are religious zealots. Jordan, this is what you got going on here is a religion. It's crazy. Yeah, maybe. It's Bitcoin. I mean, who holds from 17,000 to 3,000? And it turns out none of them sold. 86% held it. And then throw on top what's going on with the central bank craziness phenomenon. This is something that I want to be invested in over here. I'm trying to change your time preference. I'm trying to get you to understand what's going on over here. Heath, that's why I love you. He's the greatest. I've been watching Heath's work from afar. Try it whenever. I had so much going on here, and that's no excuse. But listen, by the way, checking in with the wife, doctor yesterday. We go back tomorrow. There's a good chance they admit her. If not, they're saying Saturday morning at 5:30 in the morning will be admitted, and that's when they're going to break the water because the baby's losing weight. So thank you for your continued thoughts and prayers for sure about that. Heath's work continues to improve. Heath is the most undervalued asset on all of YouTube. And his community is strong. Amazing stuff put out by Heath all the time. All right. What are we looking at? I was trying to change your time preference and continue to change your time preference right now. Because once we broke down from this uber bullish formation that had been since September when we broke out the bull market, up until Friday, May the 14th, when I said, it doesn't make sense anymore, I'm getting neutral. And I didn't expect that, but it happened. I didn't expect this, but it happened. Right now, yeah, if you're buying the dip, buy the dip. I bought the dip, but I'm not looking to trade. I'm not looking to trade this thing until we break out into clarity. This is this trend line over here. At that point, I'll be looking at that point for my own personal self, probably talking about it a lot less, trading lightly leveraged. When we talk about trading lightly leveraged, a lot of people confuse that for trading heavily leveraged, right? And for trading recklessly. Experts only, experts only is experts only. We'll make sure that we keep everyone. Silver spoon? Yeah. Well, Andrew, what do you mean by silver spoon? I don't know. What do you mean by that, my brother? You mean that this child's going to have an opportunity in this world that we live in over here in the future because of everything that his dad has done over here? coming from nothing, living on the streets. You have no idea. You got no idea, kid. You don't know me. All right. So what else? What else are we looking at today? Trying to raise that time preference. Not trying to get people, by the way, to have that FOMO even here to the upside, right? Now, if we could break out from that triangle, that will be beautiful if we do. It will be beautiful if we do. And if we do, look at this beautiful. We have over here the beautiful work. Let me find it. The beautiful work of Ted. Ted and Ian, absolute fire. Ted and Ian continue to be absolutely fire. Look what Ted is showing over here. If we're looking to get back into this zone. I mean, we're in it right now. We're hugging the lower bound. Could we trade below it? Yes. That would be definitely on par with what's going on. We talked about in last weekend's training session. Is it possible that we break the low over here? And if we break the low, is this model broken? It's much different. If we break the low over here and go into any type of accumulation phase, and I've showed you, right, that when that breaks out of the accumulation phase, let me just show you on the daily time frame over here. If that were to break out come September, right, is the 4-year cycle still playing out right on time? Well, it would appear so. It would appear so. Would I expect we're towards the lower bound of this range if that were to occur? I would, of course, right? So continuing to monitor. Continue. Thank you so much, Martha. Thank you for being such a blessing in this community for so long. Absolutely beautiful. Thank you so much. All right. So what else? This is all of Ted's work over here. If you're in the Discord, you go to the resources. You can find this pinned over here and add the indicator over here and just continue to track it, making sure we continue to play out on time. Loving Ian's artistry all the time. Keeping us, right? Ian's updated this one as well. Keeping us laser focused to where we're going. Brad's chart over here. It looks like, we don't know. When you're talking about root using his floor and the angle of it, if we break the low, that needs to be readjusted. That doesn't mean that they're wrong, right? They're trying. If you want Brad or root to wait until we come out in here and make a new high, and then put the line in, just so you could be like, oh, that's not what we're trying to do. We're trying to be as accurate as soon as possible. As soon as possible. The thing is once you find out that you were wrong, you readjust as soon as possible. You don't hold on to your milkshake, right? Until you could be like, oh yeah, look, you got to get right and on the right side as quick as possible over here. Thank you so much for that, Dimitri. Thank you so much for that. I'm looking at FX this morning. I see everything is pretty much unchanged. You can see that FX, by the way, has been pretty, sideways for a while. Sideways for a while. I've been out of it. I'm staying out of it. This is interesting over here on the pound Japanese yen. If we do break outside of that trend line, that opens up some upside. I'm not going to go into it right now. Tomorrow I will. Tomorrow I'll have a nice FX session. The reason I'm not is I'm going to go ahead and I'm going to prepare for the training session that we got coming up in 45 minutes. It's going to be beautiful. I'm looking forward to spending that time with you. Thank you for spending the time with me today. But before I do that, I'm going to go ahead and play some Honey Mood and come back and see if there's any comments over here that we want to talk about that tie in nicely to the session today. So let's go ahead and do that, and then I'll be back in a second. How special is that honeymoon? I'm so glad someone reached out to Ziv Morin, the composer, and let him know how much that has touched our lives and influenced what we do over here. Beautiful stuff over there. So thank you all so much for all the prayers. This came out earlier in the session over there. June 10th, we see the CPI. There's talks of inflation. Talks of inflation. Oh my gosh, what have you been? We had this conversation a year ago, right? When inflation and the signs of inflation were rampant. Now everyone who is in denial, except for a couple, still see it. It was so funny when I was watching those macro guys talk. They're like taking a victory lap and being like, oh, well, did you see we got it right? Oh, yeah, if you go back and every time there's any type of recession, you could see that yields rise, then why were you guys, on the wrong side of the trade? A year later, when you look back and you're like, oh, it's crazy. We were there. We were right on time. We were ahead of it. We saw it coming from. How does that affect Bitcoin? Bitcoin is many things to many people. If you're looking how an inflation print, a CPI print, I should say, is going to affect the price of Bitcoin next week, your time preference is all out of whack. You're doing it wrong. George shared this, by the way. This is some beautiful stuff over here. George was sharing, I want to show you a chart of a correlation of Bitcoin log chart with the Canadian stock composite. He wants out to define it's the market capitalization weighted securities that meet the minimum size requirements to qualify for inclusion. So I don't know if it's similar to the S&P 500 and or not, or more inclusive. But if you look at this, how could you not? I don't know what to make of it. It makes me think of how Bitcoin is a play against the ever increasing money supply. But over here, if you're tracking the Canadian, this is a monthly chart going back all the way to 2017, you could look where Bitcoin peaks, so does the Canadian stock composite, right? And you could see the symmetry throughout. Look at these valleys over here, and then another peak, valley, leg up, peak. What's going on over there? Very interesting. If anyone has any insight, I would like to know it. If you could share it on the macro channel in the discussions on the Discord, I'm very interested because I have a feeling this is more like a canary in the coal mine type situation and is giving us some type of insight into the broader picture that's going on with Bitcoin. Who cares about what happens next week with the CPI? We're looking at signal here. We're looking at as the fiat gets devalued, as the monetary supply increases, what Bitcoin is tracking, how and why. All right, remnants of a stock operator, one of my favorite. Couple of things over there. Boom, 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 boom. This one, Scott. How long do you think it takes for those wiped out with leverage to enter back in? So it's a good question, and I don't think it will be too long. I think a lot of people lost a lot of money, and a lot of people, if they had money and weren't wiped out, would be all in already, But the reason it's gambling. There's no question about that. It's gambling, right? So I don't know. I would think that as soon as possible, anyone who was there are a lot of people who learned hard lessons and good lessons for sure. And if you're here, you're probably one of them. And that you understand, now I understand what experts only means. Now I understand what lightly leveraged means. Now I understand that maybe I need to invest more time and actually have a different type. I think a lot of people here are very smart. There's no question about it. But you have the internet, and the internet is out there gambling. No question. I don't think it'll be too long before you start seeing that increase. Now, whether or not that means, and it's also dependent about how quickly Bitcoin breaks out over here. If we do enter some type of resumption that seems to be, following in more line with our expectations, right? At that point, I think that you would see the leverage returning a lot quicker. If we go into an accumulation phase, I think it'll be a lot longer. But I think in this period, that I think the leverage will be higher than it was that was just wiped out as we get into that blow off top area over there at that phase. That's just speculation. I don't know. Great point over here about Raul understanding Bitcoin as a new asset class by itself. there's actually a thread that he put out showing when he talks about, I want to share it with you. So I'll do it tomorrow. He talks about, whether or not it's Google. He uses Amazon. He uses them all on a log chart, and he talks about user adoption, and he talks about exponential growth and how Bitcoin falls into that category. And I think that's a lot. I think that's one thing that everyone should just like focus in on, is where you see Bitcoin going tomorrow. As you see some of the world's richest people, as you see some of the world's biggest funds and institutions positioning themselves now into Bitcoin, and as you look, what is it, by a minimum 2026, you're going to see over $1 billion users on the network. I think, like, where do you see Bitcoin going from here? And it should be very clear, as one of the greatest lessons I learned, right? All that money I was spending on Amazon back in, the mid 2000s, if I had just been dollar cost averaging into Amazon, it would have been a massive, 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 massive investment. And that's how you should have, that's the time preference, especially those younger should have, or anyone should have, on Bitcoin right now. So, Jack, I didn't get to see Alan's tweet. I want to go ahead and see Alan's Twitter thread over there. Make sure you're following everyone inside CTM, and even just use hashtag CTM, and then start looking for hashtag CTM and following each other, because it's nice. You guys are all really nice. I enjoy spending my time with you. So thank you for sharing this morning with me. Thank you for sharing this gift of life, this moment in this beautiful gift that we share together. All right. I'll see you all in 35 minutes as we go live for the training session, and we'll be taking it from there. We have Brandon bringing the fire, talking about Bitcoin momentum, right? Talking about Bitcoin momentum, when to be in it, when to be out of it, as well as when to allocate into alts. Beautiful stuff. I'll see you all in a little bit. Have a beautiful day, and I'll talk to you soon.